Tia McCauley of McCauley Tax Consultants, and welcome to the Meet Your Accounting series, where we simplify taxes and accounting so you walk away more confident and knowledgeable about the subject matter. So we're going to start off with a little housekeeping or a disclaimer. While I am an accountant, I am not your accountant. So use this video for information and entertainment purposes only. I advise you to, for one, do your own research, consult your accountant advisor or tax attorney. And if you would like to engage with me to be your accountant, I will be sure to include our website in the description where you can hit the contact us button and schedule your free, no obligation consultation. Now that we've got the business out the way, welcome to the Meet Your Accounting series, and today we are going to discuss ways that you can legally reduce your taxable income. Again, I said legally reduce your taxable income. So if you're looking for ways to illegally reduce your taxable income, you clicked on the wrong video or you are in the wrong place, okay? We are talking about legitimate ways that you can reduce your taxable income. And we're not talking if you're a billionaire and you have a team of tax attorneys and accountants working tirelessly behind the scenes to get your taxable income to zero. That typically does not exist for the regular W-2 employee. So we're going to discuss some practical ways that you can implement right now. We're in February of 2022, but you can implement right now to start to reduce your taxable income for year end, okay? So starting off with your retirement savings plan. If you do not have one, or if you do, start contributing to your retirement savings plans. That is your 401k or your 403b. A 401k is typically reserved for for-profit organizations, and the 403b is for government agencies or not-for-profit organizations. And in 2022, you can contribute up to $20,500 to your retirement savings plan. And if you're over the age of 50, then you can contribute an additional $6,500 to your retirement savings plan. So you win on both sides, right? You get to contribute to your retirement savings plan, and you get the tax benefit of reducing your taxable income at this point. So they incentivize you to save for your retirement. So that is something that you can do right now. Ask your employer about your 403b if you are in a government agency or a not-for-profit, or a 401k program if you are in a for-profit agency, and start taking advantages of contributing to your retirement savings and getting the tax advantage right now. There's a lot more that goes into that 401k and tax advantages and strategies. We're not going to get into the details on this video, but that's one of the practical things that you can do right now. Number 2, pre-tax commuter benefits. For those who are not aware, if you're in New York City, that is your transit check program. If your employer offers a pre-tax commuter benefits program, by all means, you should sign up for that. Especially if you are commuting to and from the office. And for those of you who are not aware of the commuter tax benefit, the IRS allows up to $280 a month for commuter benefits, and that is for you to commute to and from work via mass transit. So that can be the train, the subway if you're in New York City, or your local bus. You can use that for parking meters, for parking garages. You can use that for rideshare programs like Uber and Lyft, okay? So that's $280. That's pre-tax dollars that can go for your commute to work. So if you are employed as a W-2 employee, by all means, ask your employer, hey, do we have a commuter benefits program? And if they do, you need to find out how you can sign up for that, okay? Number 3, HSA or FSA. So HSA is a health savings account, and an FSA is a flexible spending account. And if you had to think about it in any context, think about it as a savings account for qualified medical expenses. And one of the most prominent differences is that an HSA It's typically used if you have a high deductible premium, right? So if you're in a high deductible medical plan, people typically use an HSA. Now with an FSA, which is a flexible spending account, they have a use it or lose it rule. And for those of you who are not aware of what that is that you typically have a calendar year to spend the money, the pre-tax dollars, allocated in your FSA. And if you do not spend it within that calendar year, some employers allow you to roll over a portion of it, but there are limitations with that. Or you lose it, right? So if you set aside $200 in your FSA, but you've spent none of it and you're approaching upon December, you actually end up losing that money and you cannot use it again. So HSA has no expiration date. FSAs, they have the use it or lose it rule. Nonetheless, it is a good way to offset some of your medical expenses with pre-tax dollars. So if your employer offers an HSA or an FSA, by all means, you definitely should be taking advantage of that. Number 4, crypto losses. So if you've been hiding under a rock for the last couple of years, you are completely in the dark, but if you're not, then you know crypto has taken things by storm and people are buying all types of coin, whether the standard and stabilized coin or the altcoins, right? And the market is quite volatile. So there's losses, there are gains, and it can move at any time. If you incur losses on your crypto, you can offset that against the capital gains you have. And capital gains are the gains that you gain from being in the stock market, right? So that's your stocks, that's your bonds. The losses that you've incurred in crypto can offset the gains that you have there, and vice versa. So let's say you are losing money in the stock market, but you've made a ton of money trading crypto, and you can use the income that you made trading crypto to offset the losses that you've made in the stock market. So do not allow those losses to go to waste when buying and selling your cryptocurrency. By all means, if you have losses, use that to offset your capital gains as well as your ordinary income. So that is something that is practical that everyone can use. That can be reported on your tax return. So don't let that one slip through the crack. And number 5, gambling losses. So I don't know which state you sit in, but I sit in New York State, and sports betting just got legalized here maybe a week or 2 ago. And so if you are into gambling, whether it's sports betting or the casinos, don't forget to write off your gambling losses. And we're going to use the example of you went to the casino and you won $5,000 playing the slots. Excited, yay! A casino employee is going to come over to you and ask for your information because they have to report those earnings to the IRS. So the same way they give you that slip, if you don't report those earnings, guess what? They're going to come back to you and say, hey, you remember that $5,000 that you won at the casino? You forgot to report that on your taxes. So what you do when you earn anything, or if you're just gambling in general and you go there quite frequently, if you're earning money, they're going to report that. And I also ask that you ask for a statement of your losses, right? Because you can offset those losses against your earnings. So for this example, let's say you won the $5,000, but you lost $3,000 actually winning the $5,000. That $3,000 that you lost gets offset against the $5,000 that you earned. Thus, you only really report an earning of $2,000. But if you didn't have your statement of losses or kept track of them in that casino, then you would be reporting $5,000 of earnings instead of the $2,000 of earnings to the IRS. So when you're winning and you're on your high at the casino, or you're sports betting, if you're allowed to do sports betting in your state, make sure you keep track of those losses, because you're going to utilize that to offset the income that you've earned with those winnings. Okay, so these are 5 things that you can do right now to help reduce your taxable income. If you found it helpful and you're considering doing any of these, by all means, put it in the comments. Which one are you doing? And let me know how it is working out for you. Hi, I'm Fatia McCauley of McCauley Tax Consultants, and thank you for joining me on the Meet Your Accountant series.